Hello everyone, welcome to the Ichimoku.co and Forex Trading TV daily FX market review for the trading day ending Monday, July 7th. Well, firstly to the Euro US dollar, and here we see a continuation of the trend to the downside today, candle making a lower high and a lower low, but a white body candle. So a switch in momentum from the downside to the upside. Even though we haven't had a change of trend, it does set the market up for a potential change of trend to the upside. This is a potential harami reversal pattern, a bullish harami, and here we have the prior downtrend in force, the prior black body, and the small white body that's within the body of the previous body, and suggesting that there has been a loss of downside momentum by the sellers and a switch to the buyers here, so suggesting that we could see higher prices. Now the problem here for the buyers, however, is that the market has found some resistance around the Kijun-sen indicator, and that will be a barrier to this market moving forward. If we see bullish activity up above the highs of today's trading, we could quickly see this market trading up to the Tenkan-sen trading at 136.37. But if the sellers come into the market, if we look at this trading down below the 136 area over the past couple of weeks, we've seen strong upside price rejection from there, and the market closing only down below there for the previous day's trading prior to today's trading. So it does suggest that this is an area with a very large zone of strong support from 136 down to 135.60, and then down to the 135.20 in the 135 area. So some very solid support below where the market's trading. Now just looking at the Fibonacci Extension, and here with today's trading we've seen the market test exactly to the 161.8% level, be rejected from there with this large shadow on the bottom highlighting the sellers losing commitment, and on a candle where the buyers have taken control, although not being strong enough to change the trend. So it does suggest a very real possibility of a change of trend and a possibility of the market trading to higher levels and at least to the Tenkan-sen around the 136.37 area. And with the the Fibonacci retracement technique, we have the market testing exactly to the 100% level, and the sellers losing commitment there with a potential reversal pattern, or harami reversal pattern, suggesting a very strong possibility of a change of trend in the first time frame. Next, moving to the US dollar Japanese yen, and here we've seen a change of trend to the downside. This second last candle is the one that we're watching, the candle that has completed trading for the 7th of July. A very solid black body candle, the sellers finding some downside momentum after a very solid bullish 3 consecutive days of trading, finding resistance at the 102.19 level. The previous day's trading hadn't changed the trend. It was a bearish harami pattern, and we have had confirmation of that change of trend today. And at the moment, as this current candle is developing, we are seeing the market trading outside of the Ichimoku cloud. Now we saw the market find support for today's trading. It has completed at the bottom of the cloud and around the Tenkan-sen indicator, which is what we'd expect, and that's around the 101.74 level. Also for today's trading, we're seeing the market test to the 101.65 level, and we're seeing buying coming in there. So this is not a good market to be trading. It's a very indecisive market. The market has attempted to trade up through the Ichimoku cloud on multiple occasions over the past couple of months and has been rejected, and once again we're seeing rejection from within the cloud. The problem here is that when we see that rejection, we don't see any substantial follow through, and the market ends up finding support around the 101.65 level or the 101.17 level. So a very, very difficult market to be trading on the daily time frames. Next to the Aussie dollar US dollar, and here we see the market attempting to rally. And that final, the second last candle on the chart is the candle that has finished trading, and we're seeing the buyers taking control as they did with the previous day's trading, and just closing up above the Kijun-sen indicator, suggesting that we may have seen something of a change of sentiment back to the buyers after we had a couple of days trading down below the Kijun-sen. With this current candle that is still developing, we have the market rallying above the Kijun-sen and finding some resistance around the 94-cent level. That will be an important level moving forward, as will the 94.20 level, which will be even more important because we have the Tenkan-sen indicator trading around there at 94.16 and strengthening the amount of resistance around there if the market does attempt to rally through there. Any sell-off should see potential support at the Kijun-sen trading at 93.67, and that's what we've seen in this current candle, and then also down around the 93.30 level and down down below there at the top of the Ichimoku cloud around the 92.78 area. Now just looking slightly bigger picture here, and you may recall that the previous week we were watching this large congestion area that formed in this market on the daily charts, and here we have the prior very strong uptrend, first and second time frame uptrending price action, and then this sideways movement with something of a very hard to describe this pattern, something of a rectangle type pattern, certainly too big to be a triangle. And then we had the breakout, and we were looking for the close above the upper barrier. We saw a bullish close. It did suggest that there was good potential for this market to develop higher, but we didn't see any follow through. And that's something that we really do need to watch with these markets at the moment. When we're seeing this strong bullish or bearish activity above important areas of support or resistance, such as the Ichimoku indicators or some of these levels based on peaks and troughs, we're not seeing that follow through, and it's very important that we see that. It is a little bit more conservative, but in this situation it certainly would have saved us from a trade that has depreciated substantially from that 95-cent level. So very important to confirm these breakouts at the moment, and that's just a characteristic of most of the FX markets that we're seeing at the moment. Next, moving to the US dollar Swiss franc, and for the second consecutive trading day, some indecisive trading. The previous day a spinning top, today another type of spinning top, but with a larger shadow on the top and the bottom and a smaller body, suggesting that the amount of net momentum that's been made by either side has been negligible, and suggesting that the uptrend that the market's in is in danger of not continuing. It does suggest a very real possibility of a change of trend to the downside. This is a bearish harami pattern. We haven't had confirmation of that change of trend yet. We have the prior trend, and here we see at the end of that trend this small candle suggesting that the buyer's upside momentum in net terms has dried up, and even more so for today's candle. The indecisive spinning top type, almost doji candle, suggests that there is a lot of indecision in the market now. We're not seeing this very strong bullish activity with the buyers being strongly committed to taking the trend higher. And for the second and third consecutive trading day, we've seen the market testing to or just beyond the Kijun-sen indicator at 89.45, and price action being rejected from there, and that suggests that that is a very strong barrier to this market, to any further upside. Just above there we have the 89.65 level. That's been a previous level of strong resistance. The problem here, however, is that we now have this market bound by strong resistance overhead, but then solid support at the Tenkan-sen indicator at 89.07, and then just below there around the top of the Ichimoku cloud at 89.02. So not a good market to be trading at the moment. What we want to see is resolution, either above or below these areas of resistance or support. And what we want to see then is a strong bullish or bearish breakout, and then some follow through. So confirmation of that, just to be a little bit more conservative with being convinced that we do have some solid commitment to these breakouts, but that's not what we're seeing at the moment. But with this indecisive trading here and the potential bearish harami pattern, we will be looking for confirmation with a lower high and a lower low for a downtrend, and if we see that, we will be watching the Tenkan-sen indicator at 89.07 to hold as strong support. And just looking at this pattern that developed previously with the US dollar Swiss franc, and this was one that we were watching, something of a descending triangle. It did complete as a reversal pattern. We saw the strong bearish close down below the bottom barrier, which gave us completion. We had a target down around the 87.80 level, but we didn't see that follow through. Immediately following the bearish breakout, we saw the buyers attempting to come back into the market with that candle, and then the change of trend back to the upside. Now, little wonder, and this is where the Ichimoku indicators have helped us in deciding that this was probably a pattern and a breakout from a pattern that wasn't worth trading, because we had the market interacting within the Ichimoku cloud, and we know anywhere within that cloud we will see exceptionally strong support or resistance, and that's exactly what's happened here. The cloud has acted as very solid support, and it's actually helped us to determine that this breakout has not been a good trading opportunity in terms of trading the breakout from the congestion. And we have seen the buyers continue to the upside with a breakout up above the Ichimoku cloud, and then once again a lack of decent follow through combined with the resistance around the Kijun-sen indicator. So here in this case, normal chart reading trends and patterns has been then qualified by the strong indications that we get from the Ichimoku indicators in terms of support and resistance. They also provide us with a strong indication of direction in the market, and at the moment we have the market trading above the cloud, giving us strong direction to the upside, but then finding resistance at the Kijun-sen and suggesting that the momentum to the upside in terms of the medium-term time frame with the Kijun-sen holding as resistance is certainly not there.